Welcome, grade 10s. You are with Ashraf Patel, and we are dealing with the section on the financial indicators, remembering that our emphasis in this lesson is on the liquidity ratios. Right, the liquidity ratios that we have dealt with to date would be the current ratio and the acid test ratio. Let us look at the information that we have. We are given the current assets valued at 36,000. We are told that the inventory amounts to 20,000 and that your current liabilities amount to 12,000. You are also told that last year's ratios were as follows. The current ratio was 2,5:1 and the acid test ratio for last year was 1,5:1. Let us first calculate the current ratio for this year. We know that the current ratio for this year is current assets is to current liabilities, and if we state that as a ratio, it will be 36,000 is to 12,000. And remember that we always want to express this ratio as something is to 1. Therefore, we will express this ratio as 3:1. Okay, now that is the calculation of the ratio. But that's not the B end of it all. We now have to comment on this ratio. Firstly, we can see that from the previous year there was an increase in this particular ratio. Why do we say that? Because it increased from, what was it last year? From 2,5:1. It increased from 2,5:1, and it increased to what? To 3:1. So immediately we do a comparison with the previous year. Right, now what does a ratio of 3:1 indicate to us? It indicates that for every 1 rand that we are owing, for every 1 rand that the business is owing, we have an amount of 3 rand available. This means that after having paid our current liability, we will still have an amount of 2 rand available. Remember that in this case here, since your current assets are 3 times greater than your current liabilities, so the current assets are 3 times greater than the current liabilities, as is evident from my calculation. This means that the business should not experience any liquidity problems, and what they should guard against is that this ratio should not go too high. We know that if this ratio goes too high, then it would mean that we have idle assets in our current assets. In other words, there would be idle assets which are part of our current assets. Now, let's go to the acid test ratio. With regards to the acid test ratio, number 1, our calculation, we know it is current assets minus inventory is to current liabilities. And from our given information, we know that our current assets are valued at 36,000 and our inventories are valued at 20,000. So therefore, If we do, we say 36,000 minus 20,000 is to my current liabilities of 12,000 Rand. And if we do this, we're left with a figure of 16,000 is to 12,000. And remember, we want to express this as something is to 1. And in order to do that, you divide both sides by 12,000. And you are left with an answer of 1,33 is to 1. Okay, so now how would we comment on this ratio? One is the calculation, but very important is the comment. Firstly, let us compare it to last year. And if we look at last year, we can see last year's figure was, for the acid test ratio, 1,5 is to 1. And this means that if we do our comparison, we can see that it decreased. And what did it decrease? It decreased from 1,5 is to 1, and it decreased to 1,33 is to 1. Now, what does a ratio this year of 1,33 is to 1 indicate to us? What are the conclusions? It means that without having to sell our stock, the business has R1.33 available for every R1 that it is owing. Okay, we can say that this ratio is adequate. We can say that this ratio is adequate and the business would not experience any liquidity problems. However, what is very important is that the owner should be made aware of the following. 1, the dangers of carrying excess stock. Why? Because we do know that as far as stock is concerned, what does it do? You get exposure to the following risks, namely damage. You may also have theft, and you may also have obsolescence. And what do we mean by obsolescence? A very simple way of explaining it. We can say it goes out of fashion. For example, if the business is selling designer wear, you and I know, grade 10s, that we can say that the goods go out of fashion and then nobody would be interested in these stocks. Also, when we are dealing with the difference between current assets and current liabilities, we are talking about an item that we refer to as working capital. What is working capital? The difference between my current assets and my current liabilities. Now remember, this is the difference. It's not in the form of a ratio. This would mean current assets minus current liabilities will be equal to my working capital. Okay, grade 10s, in this lesson you have seen how We actually calculated the ratios and we commented on these as well. Time for our questions. Okay, here goes grade 10's question 1. How do we calculate working capital? Working capital is the difference between current assets and current liabilities. So current assets, if we take our current assets and we subtract our current liabilities, this will then give us our working capital. And number 2, what is the difference between the current ratio and the acid test ratio? There is one difference only, and that is the use of the current asset, namely, which current asset do we include in the first one, in the current ratio? We include our inventories. So, when we are doing the current ratio, our inventories, namely our trading stock, is included in the calculation. And when we are doing the acid test ratio, then we exclude. Remember, we exclude our trading stock. That's it for this lesson, grade 10s. Until the next lesson, keep your feet on the ground and be good. Goodbye.